Good day, everyone, and welcome to our webinar for November 2024. We begin as usual in America, where the big news, of course, is the election, which is going on right at the moment. It's probably the most important election in US history, and at the moment it seems to be going in the direction of Trump, from what I can see. This is probably pretty bad news for countries like Ukraine, but I think it's also bad news for America and democracy worldwide. But there is still an outside chance that Harris could win. The problem is, of course, that if she wins, she'll win by a very narrow margin. And obviously Trump will contest that, and there will be all sorts of dramas surrounding that. In the past, the elections have always followed the line, or almost always followed the line of the S&P 500. If the S&P 500 was up in the last 3 months before the election, then generally the incumbent party won, because obviously a lot of Americans have 401k plans, which are very similar to our tax-free savings accounts. And as the stock market went up, their wealth increased, and they could see that, and they used to give credit for that to the incumbent party. However, over the last 10 elections, 8 out of 10 of those elections have been won when the S&P 500 went up in the last 3 months by the incumbent party. So this will, if Trump wins, this will be an exception. Although, of course, Kamala Harris, although she was vice president of the incumbent party, wasn't the president. So maybe that's the difference. Anyway, the election is unlikely to have a major impact on markets beyond increasing the volatility, which it has already done. The market has been very volatile recently. Investors generally seem to be much more interested in what the Monetary Policy Committee will do in a couple of days' time on the 7th of November. Will they reduce rates by 25 basis points or leave them unchanged? And that, of course, does not depend on the elections or who wins. It depends on whether they see the country's economy continuing to cool off, which is what they've been trying to achieve. The US labor market has been very volatile recently. From creating 223,000 jobs in September, in October it created only 12,000. The sharp drop was partly due to the strike at Boeing, which has now been resolved, and also, of course, the 2 hurricanes that they had. But the lower number will undoubtedly affect the Monetary Policy Committee's decision. In our view, the MPC will still reduce rates by a further 25 basis points, as they have always been planning to do. And of course, the steady reduction in interest rates is having a positive impact on the S&P 500, as you can see from the chart on your screen. But the past week has been a bit of a roller coaster ride, mainly because of the quarterly results coming out of the big tech companies on Wall Street. 5 of those big tech, or 5 of the 7 big tech companies reported in this last week just past, and it was a mixed bag. The week began with Alphabet reporting a massive 35% jump in cloud revenue on Tuesday. That caused the market to go up very strongly. Earnings per share from Alphabet were 212 cents compared to 185 cents in the previous comparable quarter, well above expectations. And then we had Microsoft, Meta, and Apple, which generally disappointed. They were not as good as people were hoping. And the market came down quite sharply, as you can see on the chart here, from this gap here, and the sharp drop and this red candle. But then at the end of the week, we got Alphabet, and Alphabet's results were better than expected. Sorry, not Alphabet, Amazon. And they were a bit better than expected, and that enabled the S&P to recover. As you can see, it has been doing even up until yesterday. So overall, October month was down 2.3% from the record high. So the record high is over here on this day at 5864, and we were down about 2.3%. That's obviously been sharply narrowed by the jump last night on S&P 500. And the market generally has been characterized by this volatility that I've been talking about. Obviously, falling interest rates added to the strong enthusiasm for tech shares, and we managed to get through October month, which is generally a bit scary because October is associated with stock market crashes. But there was no crash, although there has been definitely some profit taking. I think the smart money has been that has made money. It's been in the market all this time. It's made money. You know, people who bought down here at this cycle low are taking profits and getting out of the market, some of them. So that's contributed to the volatility. Now that October is behind us, we can probably look forward to a bit of a Christmas rally. Also, once the election is behind us, that will help to reduce uncertainty. A positive factor has been the reverse of the yield inversion. You may remember that the yield inversion is where the yield on the long bond, the 10-year Treasury bill in America, is lower than the yield on the short 2-year Treasury bill. That has changed now, so the yield inversion is gone. And on Friday, the yield on the long bond, the 10-year, was at 4.38%. That's the effective yield, while the 2-year Treasury bill had an effective yield of 4.2%. So there's a small gap there, but it's positive. So the fear of recession in America is receding. That's what I'm really trying to get to. Of course, if we look at the economy, inflation fell further in September to 2.4% from August's 2.5%, and that's the 6th consecutive monthly fall in the inflation rate. This, of course, gives the Monetary Policy Committee the room it requires to reduce rates. Energy costs have been important. The petrol price in America has fallen by 15.3%. Lower fuel costs, of course, were also positive for the Democrats in the election. The Trump campaign has suffered from a lot of self-inflicted wounds, with Trump making damaging statements at his rallies, threats against Liz Cheney, which could even get his bail revoked, and jokes at the expense of the Puerto Ricans, which could cost him dearly. Puerto Ricans make up about 5.9 million people in America, and they're all U.S. citizens, so they can all vote. But it looks like none of these things stuck to him, and he appears to be on track to win this election. And that's despite the fact that many prominent Republicans were endorsing Harris. We always thought the Democrats would win, but perhaps we are wrong. Obviously, we are not political analysts. We are stock market analysts, and the American electorate is notoriously fickle. Okay, let's turn our attention to Ukraine now. The deployment of 11,000 troops from North Korea to the front line is, in our view, a significant escalation. But these troops are poorly trained and too few really to have a major impact on the battlefield. Some European members of NATO will now consider committing their own troops in response. In the last 2 weeks, Russia has been attacking all along the front line, and they've lost more than 10,000 troops each week. Those troops were the troops killed, injured, or captured. So they cannot possibly sustain this rate of losses. Obviously, Putin has been hoping for a Trump win. And I think that he's been trying to increase the tempo of the war by attacking all the way along the front line to try and give the American population the impression that World War III is imminent and that Trump is probably the only one who can stop it. But of course, these attacks are coming in the rainy season, so the roads in Ukraine are just turning to mud, and it's very difficult to move. heavy machinery like tanks and armored vehicles through that mud. Turning our attention to other things in Russia, Gazprom is Russia's leading producer of natural gas, and they just reported a loss of $7 billion in 2023, which compares with the profit they made in 2022 of $22 billion. The government in Russia owns 50% of Gazprom, and in 2022 it got $9.6 billion in taxes and dividends. Obviously they got nothing in 2024, well, in the 2023 year, and 2024 is not looking much better. In fact, so far Gazprom has lost $3.2 billion this year in the first 9 months. The Russian central bank has raised interest rates to 21%. That's the highest level since the war began. The central bank justified this because inflation has been much higher than they expected. The economy has also suffered because of the six conscriptions which they have done. 6 conscriptions which are estimated to have enlisted more than 1 million men. And obviously those men were working in the economy, and now they've been taken out in order to fight the war in Ukraine. It looks to us like Putin and Russia are close to collapse. And obviously Putin's last hope was that Trump would win the elections, and he may well be happy for that. Let's hope that he's not, but he may well be. I think if Trump gets re-elected, then the pressure on Russia will be reduced substantially, and Ukraine may be forced into some kind of negotiated settlement where they give up territory. At the same time as the war in Ukraine is going on, there's obviously this war now between Israel and Iran, which has kind of taken center stage. International investors are worried about the escalation there. This is one of the reasons why the gold price keeps going up in US dollars. Iran has launched hundreds of missiles into Israel. Most have been shot down by its Iron Dome, and also the Americans have helped. Israel, of course, has retaliated with maximum force. Satellite footage shows 12 Lebanese border towns almost completely destroyed. Israel claims that they were being used as bases by Hezbollah. Hezbollah obviously denies these accusations. The war is having an impact on the elections, and I think some US voters have definitely voted for Trump rather than the Democrats because of the number of casualties, especially among civilians in the Middle East. So that might have cost Harris this election. However, in our opinion, most Americans are not really deeply concerned about the Middle East. There are certain groups in America that are, but the average American is probably not. They're more concerned about domestic issues. We believe that now that the election is just about over, the wars in the Ukraine and the Middle East will in fact subside. All right, let's turn our attention to commodities, and I'd like to begin by looking at the oil price. North Sea Brent oil, the price of that was pushed up initially. Just going to put a bit more data on the screen here. It was pushed up by this Middle East crisis, by the war in the Middle East, as you can see here, but then it fell back again towards $74, $75 a barrel, which is where it is at now. There's definitely support here at 72, and we doubt that it will fall much below that level. But it may well rise again once the elections in America are over. If we look at the gold price, gold has been benefiting from all these wars. I'm just going to put more data on the screen again. There you can see the chart I wanted you to look at. Remember the resistance level at 2060. And then in the March confidential report, we told you that that resistance had been broken to the upside. And obviously we suggested to you that an upward trend would begin. As you can see, it has. Gold reached a high of 27.85 at the end of October on the 30th. It's since fallen back a little bit, but the gold price is rising. And that is generally a sign that international investors anticipate a period of disruption and conflict. You see, because obviously their alternative to putting their money into gold is to buy US Treasury bills, which at least give them 4% or 4.3%. If they put their money in gold, they don't get any return at all. So if they're doing that, it's because they're willing to sacrifice that return for security. Gold is obviously the ultimately secure asset, more secure than anything else in the investment world. And if investors are going in there, then you know they believe that there is a period of turbulence in the world that is coming soon. All right, and of course we did add Harmony, the gold mine Harmony, to the winning shares list before gold broke up, quite a long time before it broke up. We added it on the 16th of November, and in the year that has followed, it's risen by about 90%. The gold price in rands is at a new record high of 49,000 rand per ounce. Okay, let's look at the political situation as it's developing here in South Africa. We had the first poll that came out since the Government of National Unity was appointed, and it shows that 60% of people in South Africa believe that the GNU is doing a good job. It shows strong support or improved support for both the ANC and the DA. The EFF support, however, has dropped sharply from 10% of the electorate down to about 6%. Clearly, South Africans have turned their back on populism. MK support remains mainly tribal, which also limits its appeal. It's only really got appeal for the Zulu Nation, and not all of them either. The NHI, the National Health Insurance Act, is probably the greatest stumbling block for the Government of National Unity. There are now 3 separate legal actions which are contesting its constitutionality, with more legal actions probably coming. It was signed into law just before the election, obviously a populist move by the ANC to try and shore up their dwindling support. But President Ramaphosa is now engaged with the DA to try and work out their differences and avoid a major conflict within the GNU. And then, of course, since I spoke to you last, we had the midterm budget policy statement at the end of October. The most important thing about that budget policy statement is that it was agreed between the ANC and the DA. And that shows that they are working together very closely and that they are cooperating. They both agreed, for example, that debt consolidation must take place within the South African economy. The content of the midterm budget policy statement is nowhere near as important as the ability of the DA and the ANC to work together. That adds a whole layer of optimism for the future of South Africa. All right, let's look at the economy now. And we'll start by looking at some of the things that came up in the midterm budget policy statement. The first is that the government's debt is now seen as peaking at 75.5% of gross domestic product, and the interest on this will reach 22% of total tax revenue. That's very, very high. Debt service costs are now the single largest budget item in the MTBBS. 11 billion rand is also going to be given for retirement packages for civil servants. So they're reducing the retirement age to 55, and obviously they have to pay these people out if they decide to retire, and that will cost 11 billion rand, but it will reduce the civil service by about 30,000 people. This will be painful in the short term, but highly beneficial in the long term. Also, I noticed that the Department of Minerals and Energy is going to be split into 2 departments, which I think is sensible. The MTBBS addresses the underfunding of the South African Revenue Service and Justice. Both of them are getting more money now. In a recent report from SARS, they said that the tax gap which is the money which could be collected by SARS, but it has not been, is around 1 trillion rand now. And that is 32% of the total tax liability of 2.54 billion. 2.54 trillion. That compares to Australia's tax gap, which is about 7%, and the UK's, which is 5%. So our 32% doesn't look good at all. I mean, if even only half of that could be collected, it would make a huge dent in the government's debt. It's always been difficult for me to understand the underfunding of SARS. I mean, why do they restrict SARS's funding? They should have as much money as they want, because for every rand that they are given to pay people, they can collect 5 or 10 times that amount in tax revenue. So it's never made sense to me that to underfund that department. The same thing more or less applies to justice. The Justice Department needs to have sufficient funding. So both of those departments are getting a bit more funding in this MTBPS. All right, the new government of national unity is addressing these kind of anomalies. And also the MTBPS said no further bailouts for state-owned enterprises, which includes Transnet, of course. Transnet desperately needs about 150 billion rand to improve its infrastructure. Not giving funds to Transnet will clearly prejudice the economy badly. And not including such funding undermines the credibility of the budget policy statement. Okay, the consumer price index fell further to 3.8% in September, down from August's 4.4%. The major factor here, of course, was the petrol price, which fell substantially year on year. And this makes a cut in interest rates of 50 basis points possible, but we think unlikely. We're expecting the Monetary Policy Committee here in South Africa to cut rates by about 25 basis points. And the reason for that is that they want to keep our bonds attractive to overseas investors. We see inflation continuing to fall, perhaps to as low as 3% in due course, and that makes Eskom's request for a 36% price hike in the next cycle totally absurd. The Reserve Bank is expecting inflation to fall to 3% over the next 2 years. Growth is expected to be about 1.1% this year and 1.8% next year, according to the Reserve Bank. We believe that growth in 2025 will be above 2%, and Adrian Gore of Discovery, the CEO of Discovery, who's part of Operation Vulindlela, is talking about growth of 3% in 2025. That looks a bit ambitious to us, but he says the economy can create 2.5 million jobs over the next 5 years, provided, of course, that the bottlenecks, like Transnet, can be sorted out. Adrian Gore says that South Africa is entering a period of hope and promise, which sounds really good. JP Morgan, the international finance company, says that South Africa needs to grow at 2% or more in order to attract overseas investors. This is clearly within our reach now that load shedding has ended. Money has been flowing into South Africa's bonds and equities since the appointment of the Government of National Unity, and the yield on our long bond has dropped by about 150 basis points, so that's a good sign. The rand has also obviously strengthened significantly against hard currencies, and we'll talk more about that in a moment. All of this is very good for the shares on the Johannesburg Stock Exchange, which have been at record highs, and they are close to record highs now. But much depends on things like Transnet, and Transnet moved 149 million tons of goods in 2023, and they should move about 152 million tons in 2024. The goal is to get this up to about 170 million tons by 2025 with the help of the private sector. And Operation Vulindlela is looking at a target of 193 million tons. So if that can be achieved, it will certainly help a lot of industries. For example, the coal industry is one that really depends on Transnet, and Kumba had to adjust its guidance down in the previous financial year because of problems with Transnet. Private credit extension increased by 4.8% in September, so is ahead of economists' predictions of about 4%, and of course that reflects the end of load shedding. Also, the drop in the petrol price has helped businesses to reduce costs. Retail sales rose by 3.2% in the year to the end of August. That's after July's 1.7% growth. Big improvement on last year, and that reflects also the prospect of lower interest rates this year. The largest growth came from household furniture, which was up 10.5%. Household furniture is obviously big ticket items, and consumers don't buy these things unless they're feeling reasonably comfortable from a financial perspective. Okay, the ABSA's Purchasing Managers Index was at 52.8 in September, sharply up from August 43.6. Both the local and export demand are rising. Obviously, load shedding has been a big factor, but Eskom's electricity price went up by 12.4% this year. That's an absurd price increase given the inflation rate, and remains a major negative for business generally. The informal sector in South Africa is a euphemism for tax evasion. Spaza shops operate mostly in cash and do not submit tax returns. This is changing, however. With the advent of digital banking, more and more poor people in South Africa have a smartphone and a bank account. Sooner or later, this will bring them into the purview of SARS. The South African Revenue Service will become aware of their transactions and will seek to tax them. Notably, the amount of cash in notes and coins in South Africa fell in 2023 by 0.8%. Now, normally the amount of notes and coins in the economy increases every year by the same growth as GDP, gross domestic product. But last year it actually fell. And the governor of the Reserve Bank, Letsetja Kanyago, is urging South Africans to move away from cash wherever possible. Obviously, cash has a big risk factor. It can be stolen very easily, and bank cards are easier to work with. All right, Eskom has avoided load shedding since 26th of March 2024. Unplanned outages are down to 7.3 gigawatts, from a peak of 18 gigawatts. The challenge now is to build more transmission lines. That's the big bottleneck and problem in Eskom at the moment. A plan is being formulated which is similar to the Independent Power Producers Program in electricity. But to do this, Eskom needs to break away from South Africa needs to break away from Eskom's expensive monopoly. Northam has signed an agreement with an IPP to supply 220 megawatts of power. The mining industry is moving away from Eskom now for cost reasons. They were moving away from it because it was unreliable and there was all this load shedding, but now they're moving away simply because they can produce their electricity themselves from solar power more cheaply. The price of coal has dropped from $450 a ton in 2022 to as little as $113 a ton now. This makes Eskom's price increases completely unjustifiable, considering that Eskom produces about 80% of the power that it produces is from coal-fired power stations. Okay, so renewable energy, registered renewable projects now amount to about 8.7 gigawatts, and 6.4 gigawatts of that has already been installed. A new problem is looming on the horizon though, and that is shortages of water. The Real Estate Investment Trust ATTAC is planning for water outages lasting up to 5 days. At their waterfall development, they are anticipating water shedding, and they're spending about 200 million rand on putting in precautions to overcome water shedding. Water shedding has already begun in parts of Johannesburg, so it is a big problem. This year we're expecting a bit of a drought, so you need to make a plan for your water because it's coming. That problem is coming. Okay, let's have a look at the rand quickly. Just want to go to my chart here. Okay, let's put a bit more data on the screen. Here you can see the chart. I've shown you this chart before. You see the triangle in the rand, which I've identified with this rising lower trend and descending upper trend line. So we had a cycle high over here in January of 2023, another cycle low over there at 17.75 to the US dollar, and now the rand has broken down out of that triangle. And the general rule from technical analysis is that the indicator will tend to continue in the direction that it breaks. So the downward break here, the strengthening break, indicated that the rand would continue to strengthen. As you can see, the rand has been strengthening at an increasing pace. It's been very volatile, and that volatility is because it is the favorite international emerging market currency, because it's very liquid, and we tend to have volatility in our currency even when what is happening has nothing to do with us. So something happens in another emerging market, and the rand either goes up or goes down in response, because we are the international emerging market currency of choice. Anyway, I just want to point out that the rand is strengthening, and it looks like it will continue to strengthen in the short term. Okay, let's now talk about a few companies. I want to just begin by talking about Boxer. Boxer is obviously the low-income end of Pick n Pay's suite of stores, and it has been separated out from Pick n Pay, and they're expecting to list it sometime in the next 6 months. It's an interesting company. It's been growing very rapidly, so unlike the rest of Pick n Pay, it's actually been adding stores and doing very well. In the 6 months to the 31st of August, its turnover went up by 12% to nearly 20 billion rand, and it made a trading profit of 809 million from 489 stores that it's got. It plans to open another 53 stores in the current year. So when this listing comes along, Boxer, try and remember that, it'll be under the short name BOX, BOX, and we believe it will become a blue chip institutional share in due course. Alright, I'd like to just now talk about We Buy Cars. We Buy Cars, as you may remember, was spun out of Transaction Capital and separately listed on the 11th of April. Now, you can see it was listed over here, and you'll notice that immediately the share price started to fall. The first 3 weeks, the share price fell. The reason for that is that there would have been some stagging. When there's a new company listed on the JSE, inevitably shares have been allocated to customers, to suppliers, to staff members, and so on. And some of those people do not want to hold the shares, so they sell them in the first few weeks after the listing, and that results inevitably in a kind of downward trend to begin with. But if it's a good share, those sales are quickly eliminated, and the share starts to move up, which is what happened in this case. And you can see here we added the share to the winning shares list on the 3rd of May, and the stagging, which is what we call the selling here at the beginning, had finished by then. It had finished by the end of April. So on the 3rd of May, we put it on the winning shares list here at 2085, and you can see that it's gone up very, very strongly since then. In fact, last night it closed at 37.51. So that's a very strong performance. They produced a trading statement for the year to the 30th of September, in which they estimated that headline earnings per share would be up between 21 and 26%. And the cost of listing this company on the JSE was about 45 million. But we think it's a very good listing. Okay, so now, since that time, since we added it to the winning shares list over here on the 3rd of May, it's gone up about 76% in just 6 months. So that was a very good investment, very low risk, we think, and I hope that you took advantage of that. All right, now I'd like to just look at Altron. Altron is another company, IT company, which is involved in various different things. Put a bit more data on here, I think. Yeah, we added it to the winning shares list over here on the 15th of November last year at 949 cents. It's a company involved in fintech, in health tech, and also in vehicle tracking. In a trading statement for the 6 months to the 31st of August this year, they estimate that headline earnings per share will jump by between 171% and 189%. So obviously investors anticipating that growth have been pushing the share price up, and it's now at about 1870. It might have actually gone up last night. Let's have a look here. No, it's about 1820. Sorry, it's at 1975. So it's gone up very strongly. It's nearly doubled, in fact, since we put it on the winning shares list about a year ago. So you could have doubled your money in this share if you'd been watching the winning shares list. Okay, in the construction industry, WBHO, interesting company. It's one of the most successful, probably the most successful construction company in South Africa. It survived the decimation of the construction industry under President Zuma, and this was done by selling off assets, cutting costs, and repaying debt. In its results for the year to the 30th of June 2024, headline earnings per share went up 20.4%. And if you look at the chart, you can see we added it to the winning shares list over here on the 18th of September. It was then trading for 120 Rand and 87 cents. And it's moved up to about 210 Rand now. It has been as high as 234 Rand, and we think this little sell-off over here represents possibly a buying opportunity. So you need to perhaps look at that. All right, Lewis. Lewis has been one of my favorite shares for a long time. It's obviously a furniture and appliance retailer. So they sell furniture and appliances. They've got 840 stores throughout South Africa, mostly in South Africa. They do have about 130 stores in Africa to the north of us. They obviously make a profit when they sell furniture and appliances, but they also make a good profit on the back end of the deal. So if the customer wants to finance that purchase, then they make interest and other benefits, other profits from that same deal. So we call that the back end of the deal. And they have a very big debtors book, and obviously a key factor in their business is how well they manage their debtors book. And I can just tell you from having gone through their financial statements that they are very good at managing and controlling this large debtors book, and that keeps their bad debts very low and enables them also to do well. Another factor about this share is that they have very, very low debt. Their debt to equity ratio was around 11% at their financials recently, and that gives them the cash that they need to make acquisitions. And they bought businesses like Bears, for example, which gave them a lot of new stores. And in a recent trading statement for the 6 months to the 30th of September, they estimate that headline earnings per share will be up between 45 and 55%, which would be an excellent result given how tight consumer spending in South Africa is right at the moment. We added it to the winning shares list there on the 1st of December last year at 41.50. Now it's about a year later, the share is 76.12, so it's gone up 83% in just less than a year. Okay folks, that's about all I have for you today. I need to go back and look at that very disappointing American election which is taking place, and once again remind myself that I am not a person who can predict elections. My skill is in the stock market and not in politics. Thank you for listening, and you can follow me on Twitter as well. I do put up tweets from time to time, and you can pick up a reference to that in the notes down below. Thank you for listening to me, and I hope you got something out of that.